Hello, traders. Welcome back to Your Nifty Guy. I hope all of you are doing well. If you have noticed, I haven't been posting the daily trade plan videos over the last few sessions, and that's been completely intentional. Right now, the market is extremely volatile, and most of the movement is happening through overnight gaps rather than clean intraday price action. When markets behave like this, the usual intraday structures simply don't form, and forcing trades in such conditions can actually do more harm than good. And as I always say on this particular channel, our first job as traders is capital protection. Profits always come second. So today's video is not just about a trade plan for tomorrow's weekly expiry. Instead, this is more of a market update where we'll step back, look at the higher time frames, understand what the market is actually doing, and discuss how we should approach trading in these conditions. Before we begin, if you find these daily updates helpful, do hit the like button and consider subscribing to the channel. All right. And with that said, let's jump straight into the charts and see what the market is telling us. I have not been actively trading on intraday basis simply because uh, the way market is behaving currently based on all the geopolitical issues that's been going. I am sure everybody who is a trader must be aware of the same. uh, it is not a favorable situation or a favorable condition to trade actively on an intraday basis, especially with the VIX rising by big numbers every single day. Today, again, at one particular point of time, VIX was up around 28. So this is around here, around 24-25% VIX was up, high up. So we'll be discussing everything in today's video. Just stay tuned, stay till the very end. Uh, the plan is again not to actively trade right now and wait for the situation to become much more favorable. But then again, the purpose of coming online today is not just to create a trade plan for tomorrow, but to try and understand what exactly is happening and what should we not do, rather than the focus should be on what should we not do rather than the focus being on what should we do in these situations. See, any VIX above 18, I believe, is not good for option buying. The reason being, uh, with one slight drop or crunch in the VIX, the premiums will crash against you, right? So even if you're right, uh, in the direction you have taken the purchase the right call or right put, but then because the VIX is highly inflated and a slight crunch also in the VIX, and right now the VIX is moving by a good number of percentage, and then again coming back down below by a good number of percentage, all on an intraday basis, right? So that will again not let you trade peacefully as an option buyer. So that is the reason why I am suggesting that let the VIX actually cool down a little bit. So if you look at the intraday straddle prices very near to the expiry, so today was expiry minus 1 day, uh, the prices are almost four times, if not more, what they usually are, right? So that is again something which you need to take into consideration while you are approaching. So I did not make the video on the weekend, so we'll first start with the uh, weekend video. Well, not the weekend video, but in fact, well, with this particular week's video, right? So, after all these negative candles wherein the market had reversed on a weekly time frame, this is what we had discussed on the week ending 23rd of February. And out here, the week which was the 2nd of March week, we again gave a good closing below this particular swing as well, turning the overall bias negative. Although we were trading above the gap area, which we have successfully breached today. So this was a gap which was long pending, but since because now it has been filled, we will be moving it back, right? So this gap area, which we had been continuing, this was the gap which was there, wherein markets had gapped up, and the market was time and again taking support from this particular gap area, and that is why we had also extended it. That has now been breached, and there is a new gap which has been created. So markets closed around 24,450 odd levels on Friday, and today we opened with a big gap down. So we'll be marking this gap area as well. We don't even need this particular point that we had marked. We are much well below it. So we are doing away with all the old points and we are starting with a fresh slate. That is the point. I will not be very actively trading in this particular week as well. Day after, on the 11th, I am traveling down to Vrindavan with my family for 3 days. I'm back on Saturday, so I'm not sure if I will again be giving you updates. So the link to the Telegram channel is also in the pinned comment. So make sure you are subscribed to that channel. I might be posting updates over there on a 4 hourly time frame. Again, see, things are bearish, but then the sentiments being bearish, we have to be wait. We have to actually wait for the price action to give us a good uh, a change in direction before we can actually look at taking trades on the long side. Although, however, if you look at the intraday price action today, after the gap down 500 plus points, gap down 10 minutes, market was trending downwards, but then again formed a base and slowly and steadily moved up, right? I don't think any particular point in the price entire price action apart from the move which came in post 230 around here, you would have made money in any uh, call option buying as well. So that is something which is going against us because the VIX is already inflated, the premium prices are already inflated, and when the market moves up, the premium prices they actually go down and not giving us the equivalent spot move which is there. The equivalent of the same is not being seen in the option prices. So that is the reason why I'm saying let the VIX cool down a little bit. Let it be reasonable. The markets are not going anywhere. Right now, what I will also suggest is in case if you do invest in the stock market, uh, do look at the charts of all your holdings, or if you are not there and you are looking at starting an investment journey, I believe right now is a very good time. I am doing the same. Study those charts, study charts of good stocks which are at good levels right now because of the entire global turmoil, because of the panic selling which is being seen in the Indian markets as well. There are certain stocks which are available at good prices, at very good discounted rates. And once things stabilize and normalize, they will be the first ones to recover, right? So that is how they show strength, and that is how exactly right now should be the time wherein you should look at actively buying in those stocks in in cash for your portfolios. So yes, so like I was saying again, we will first mark this gap area, right? Now this gap will actually act as a good resistance. And the markets which are right now, nothing actually is working, not buying, not selling. This is daily time frame gap area. We have this marked on our charts for now. Apart from this, I could see a good clear swing on the 4 hour time frame, and we will use that to draw our fib levels. All right, guys. So, see, tomorrow is the weekly expiry. Uh, let's see how the market opens up tomorrow. Right now, it is usually a gap up and a gap down movement, 100%. Most of the days, market is moving in big gaps or big gaps, either be it gap up or a big gap down. So let's see how the market opens and if we get any intraday opportunity. In case if the market opens flat or with a slight gap up or slight gap down, make sure you can take good only the high probable trade setups which are there. And in case if you are trading tomorrow, make sure you are shifting your entire trading to the following week's expiry. I know, although the premium prices are very inflated, keep an eye out on the VIX. We'll also discuss the India VIX segment and how it impacts our entire trading in just a few minutes from now. Let us just prepare the plan for tomorrow. In case if market gives us a favorable opening and being in expiry, if we can take some trades tomorrow, we will try to take those. So yes, any negative price action, if we open the gap up and we see any negative price action around this zone, this is not just the gap area but also the fib resistance. So out here we can look at a good trade on the downside. Long trade, I will be only and only keen above this particular price action. For the short trade, again, let us use fib from the days end to days high. In case if I'll be simply using the point 0.5 level. So this is a good area of consolidation from where we saw a buying. So I'll not be keeping things complex, but I'll keep things very simple. I'll take this particular swing low. In between this particular area, I will not be interested in taking any trades. And again, a short trade can very easily and very beautifully be taken below this particular swing as well. So this will also is into also taking into consideration that we are again going back below the 50% level of this entire buying that we had seen, and we can then comfortably take a short trade. uh, I am telling you guys, there is a time to be aggressive. There's a time to be defensive. Right now is the time to be very, very cautious and very, very defensive. It will not take too many trades to blow up your capital, blow up your trading account, get you demotivated. So do not take anything otherwise. But then I am just being a good mentor, if I can call myself that, by giving these warning signs to you. The conditions are not favorable, right? Even when fishermen go into the sea, sailors go out into the sea when the sea is very, very rough, very, very calm. They do not think that, okay, we are sailors, we have to venture out into the sea. No, they will wait for the weather to calm down, for the seas to be calmed down, and then only do they venture out into the sea. So, exactly that is the same thing that we have to do while we are navigating the rough waters of the market. So, yes, this is my sincere suggestion to all of you. And I will keep my trading very, very simple. And yes, limit your quantities to the bare minimum that you can. We'll also quickly look at the India VIX on the daily time frames as well, right? So these were the times when we're saying that, okay, the India VIX has crashed and we are trading at very low volatility levels. And look at the jump which has come in from there. Right, so this is what actually happens when the VIX goes either side. So try to understand what I'm telling you guys about the India VIX out here is right now we are at these levels. Now try to compare it with recent times when the India VIX was at these levels, right? So we are at 23.3. Out here, India VIX was roughly around the same levels, around 4th April 25. And look at the crunch in India VIX, right? So this is not a normal India VIX, but then again, a good 40% crunch, 42% crunch in just a couple of days, right? One, two, three, four, five, almost a week of trading, and India VIX completely crashed. So even if you would have been buying puts out here, right? India VIX is crashing. Maybe the markets are going down. Even if you would not have made good amount of money, it would have been very, very difficult. Same is the levels out here. So these are the things which we need to try and correlate with in the markets. Maybe even if sorry, India VIX has been going down, maybe the markets were going higher up. In the option prices, you would not have been making a good amount of money. Same is out here when this is COVID, I believe. Yes. Nope, this is not COVID. This, I believe, Russia Ukraine war. COVID would be even higher. Yes, so this was the COVID India VIX. Of course, historically, these are rare events. Again, markets were taken in by surprise, and that is why you could see this huge jump in the VIX. And usually, you don't see those levels. Again, these are also extreme levels. It is Good volatility can give you good trades, but then again, being option buyers, we have to be very, very uh, cautious and consider about what trades are we taking. So yeah, uh, that's the current structure of the market and what we should realistically expect going into tomorrow. Yeah. So right now the market is moving, like I said, mostly through gaps and sudden volatility. And in such conditions, the best trade is often no trade at all, as traders' patience and capital preservation are far more important than forcing trades every single day. Let the market come to your levels, not the other way around. If you found this update helpful, don't forget to like the video and subscribe to the channel. And do let me know in the comments how your trading experience has been in this kind of volatile market. Are you trading actively or mostly staying on the sidelines just like me? I will see you in the next one. Until then, remember the markets rewards patience far more than aggression. Happy trading, guys. Cheers, and thanks for tuning in once again. This is your Nifty Guy signing off.